Segment with BIS Commodities. Just taking a look at this past week in the ag commodity markets. Let's just start out by seeing where we close for the week. Starting out with December corn. December corn actually last day of trading today. Let's go to the March. March closed 11.5 cents higher on the week. January beans closed 11.5 cents higher on the week as well. And March wheat closed 12 cents higher in the week, so 11.5, 12 cent up on the week for the grains this week in the soy complex. Over in the livestock, cattle closed down $2.65 this week in the December contract at 161.80. Lean hogs. Today was the last day for these hogs, closing at 87.52. February now becomes the lead contract at a discount down to 83.35, which is down $2.22 on the week as well. So a positive on the week in the grains, a little bit lower this week in the livestock complex, but probably the big driver this week is the energy complex. Continues to push lower with crude at one point today. WTI West Texas crude traded below $58 and yet to close here this afternoon. The last time we've seen crude trading at these levels was back in May of 2009. And if you want to take a look at the dollar index against that, the dollar index is off slightly on the week from last week's high, but it's still trading in areas that we haven't seen this high since May of 2009 as well. So the strong dollar, weak energy complex, weaker livestock complex, and we're finding strengths in the grains. The big item this week for corn and soybeans was the monthly supply and demand report. It's one of the more least anticipated reports of the year, where the USDA goes in and just takes a look at the demand side of the equation, leaves the supply side of the equation alone. We'll get our final crop production numbers next month in January. So taking a look where we came out, we were expecting not much of a change at all in our carry out from last month, and corn just a little bit over 2 billion bushels. We did see them reduce at 10 million bushels down to 1.998 billion bushel carry out. So we did see an increase in demand, not in feed, which or ethanol or exports. It was actually in food residuals. Some talk there that fructose, sugar, seen a little bit of an uptick, some demand there. Historically, again, not much of a change in these reports. Soybeans, we did see a change there of 40 million bushels cut in the carryout down to 410 million. That's down obviously from 450 from last month. And it was all added to the demand side of the equation on the export side. So we did increase exports. Exports have been running at a very lofty pace so far this year compared to other years, which compelled the USDA to increase that number. Wheat was left alone. Actually we did raise wheat carry out about 10 million bushels. From last month, 644 million bushel carry out. We raised it by reducing exports, as we are the most expensive wheat in the world at the moment. So 654 million there. We did bump wheat and corn world stocks in this report as well, and we did slightly cut soybean carryout numbers. So we did the carryout numbers for the world was a little bit of a bump for both corn and wheat, and a slight cut on soybeans. The corn market right now closed at weekly, or actually the highs we haven't seen since early June in the March contract. Right now we were able to push through $4 last night in the overnight trade and continued buying today. A lot of strength coming in from outside money, somewhat of a money flow play right now, but there is headlines out there supporting it. One is thoughts that China may ease the MIR 162 restriction and the DDGs to allow for a few more imports there. And there's also talk today as well that they may allow reduce the restrictions on imported corn as well. Just thoughts and story headlines yet to be written or realized yet at this point. Also, FSA data releasing their acres is somewhat of a hot button this week as well, to be released Monday morning. Historically, the trade doesn't take a look at that. There is somewhat of a correlation there as well, though, and there is some concerns that there may not be quite as many acres according to the FSA due to the preventative plant and acres enrolled in the program compared to other years, compared to what the WASD has to say. So that's adding to some of the storylines as well. Technically, it is a strong, supportive looking market, a close above $4. There is a gap left in the trade. The chart technicians will be looking at a gap up around the 428 in March. That's also where the 200-day moving average is, and it's also the 50% retracement from last spring's highs to last October's lows. So that may be a target that some of the tech and fund traders are taking a look at. Soybeans, unable to post new highs this week. We are on the top end of the recent trading range, though. Strong news out there on China coming to town next week. The Chinese delegation will come to Chicago next week to sign framed contracts. There are no guarantees that that will lead to more export sales. It's more of a ceremonial process, but it is something to keep an eye on, and it does add to some bullishness for the analogs as far as computers buying this thing up. Also, we do have our NOPA crush estimates. That's the monthly soybean crush coming into play, and that is released on Monday as well. And the trade is actually looking for a record high as far as crush numbers. So that's something that we need to keep an eye on next Monday. That's adding to the strength of these markets as well. Moving on over into the livestock markets, cattle futures has a little bit of a get-me-out feel. We were weak to start the week. Kind of a choppy trade to end the week. Particularly, though, feeder cattle are really getting hammered, down over $9 this week. $3 limit move down days the last 2 days, as the funds, which were a large part of the open interest in feeder cattle, are deciding it's time to get out, and the exit door isn't big enough at the moment. Cash trade this week, 164 in the West is what we're hearing, as well as the 156, 157 in the meats in the Midwest. That may find some support rolling into next week, but we did see our boxes sell off hard this week. The choice select were both down. That has probably led to the pressure as well in the futures market as they both fed off of each other. We'll see if we can find some support down there around that 100-day moving average in the February cattle. Hog futures did sink to new lows this week as well. The cash trade has been fairly steady, but we are feeling some pressure in the futures. Some of it may be due to exports, and this is for both cattle and hogs, but we did see exports down the month of November compared to the previous year, and imports were actually up. So that may have weighed on the futures market as well. That, along with maybe that ever-increasing strength in the dollar, may be weighing on exports and imports as well. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com. Everybody have a great weekend.